So thanks again, everybody, for coming out today. And I'm going to talk about the future a little bit, and a little bit about the past. Specifically, how digital assets, or the transformation of digital assets, is going to unlock billions and trillions of dollars in latent economic activity and creativity. If anyone's been paying attention to the news here in the United States, you've gotten a sense that there is an issue with the legality of cryptocurrencies or ICOs or other forms of tokenized finance. Some people have gone as far as to say that there's a lack of clarity. This is something that you'll hear fairly often. And with all due respect to all previous speakers and all use of the term lack of clarity, there is absolutely zero lack of clarity in terms of settled securities law. Settled securities law is so clearly understood by regulated financial institutions and those service providers that operate in that arena, that they are reluctant to embrace cryptocurrencies, ICOs, the things that you're here to talk about and learn more about. It's precisely because the Exchange Act, SEC 33 and 34, are so clear about investor protections that regulated financial institutions are not willing to risk their charters because you think that your token is a world-changing financial instrument. PwC, Ernst & Young, Accenture, McKinsey, every single bank, every single regulated financial institution has some form, okay, of quote, where they say, we would love to get into this, except if we did it the wrong way, we would lose our license. Until compliance questions related to the transfer to and from between individuals and entities of cryptocurrencies has been understood, until compliance has been understood by all of these entities, and that they have the proper tools in place to feel that they have de-risked the potential loss of their charters, they will not trade or accept or transfer cryptocurrencies. They have critical questions to be answered, that they need to answer. But there's one question which is above all the most important question that every regulated financial institution wants to answer. Who owns that wallet that you just brought to the transaction? Everyone here is probably pretty familiar with KYC. Know your customer. There's this other thing where it's kind of conflated. KYC and AML, like AML is this second thing, this other thing, like it's KYC. It's not. AML is the most interesting part of KYC AML. AML is what's keeping you from depositing your crypto into your bank account. Because banks need to follow anti-money laundering statutes, they cannot accept funds readily from pseudonymous blockchain wallets. Wallets that, unlike bank accounts, have no audit trail. It's a very, very big concern of theirs. At Vertalo, we believe that this is the major impediment to the worldwide adoption of cryptocurrencies and the growth of the industry that we're interested in. Liquid markets require ongoing compliance. Let me explain what ongoing compliance is. It's quite easy to bring an identity and a wallet to a transaction. And then to take that identity and move on to the next thing and leave the wallet behind and transfer access to that wallet to a third party. This is what banks and regulated financial institutions are concerned with: wallet fronting. You, respectable citizens, meeting someone in a dark alley with a wallet full of crypto and coming into their institution with your credentials and claiming ownership of a wallet. They like you, your wallet's filled with crypto, come on in. 15 minutes after you're approved, suddenly you have nothing to do with that wallet, and the wallet owner now has an account in an American bank with money of questionable provenance. This is the biggest concern for most financial institutions. They're worried about money laundering. Broker-dealers are worried about where you're getting your money from in order to make an investment in that startup or that security token offering. Exchanges and ATSs are concerned about who controls and owns a wallet so that transactions or funds can't be washed through trade upon trade upon trade. When SeriesX and Vertalo started working on its own security token offering in September of 2017, we took a look at the entire ecosystem as we were trying to produce an SEC-compliant token. You see, one of my partners is a former SEC attorney and a securities lawyer. And he said, we can't do a SAFT. We can't do an ICO. I'm a securities lawyer. I hold 3 licenses. So what we had to do as a team, in order to keep with our principle of not having our project shut down because we weren't compliant, we had to go and take a look at how to do this. And so the team at SeriesX and Vertalo learned everything it could learn about KYC, AML, compliance, SEC law as applies to tokens. And what we found was that SAFs and ICOs were not compliant in the United States. And everyone thought we were crazy in the fall of 2017. But then the pronouncements kept on coming. And as time went on, projects stopped working in the United States and they started moving overseas. And the reason for this and moving to places like Malta is because of compliance and frankly because of AML. So we designed a system that we couldn't find ourselves. We designed a platform to manage this so that we could help projects like ours create, launch SEC-compliant token offerings in the United States. Now, not just for ICOs. Our real interest is, frankly, in the digitization of real-world private equity, like private assets, venture-funded companies, real estate, funds, other things where you've got discounted cash flows, you've got real underlying asset value, et cetera. So we started designing in 2018 a system that we needed ourselves. A system that was capable of managing ongoing wallet compliance, a system that was capable of managing a cap table for holders, a system that could iteratively prove wallet ownership and issue ownership so that in money that was invested into a company like ours could be placed in custody with a regulated financial institution and then could be traded legally in the United States. There are 2 crimes in the United States that have unlimited look back, okay? Meaning there's no statute of limitations. Does anyone know which 2 crimes in the United States have no statute of limitations? Any guesses? One's murder. The other one is securities law violations. okay? Unwitting or not, intentional or not. You don't actually get a pass for not knowing the law. So this is a big impediment. So we created a company that would help you not have to know the law, okay? Would help you navigate this complex transaction, which is the connection between identity and wallet control, so that you could bring your credentials to a deal and give comfort to the chief risk officer or the chief accounting officer or anybody else at a chartered financial institution. We've built a compliance and registry solution for custody and broker-dealer platforms. Why should you care? If you're here and you're an entrepreneur and you're starting a company, you do not want to take on tail risk. Tail risk is a concept that means if you make a mistake now, you drag that mistake around with you forever. You know, cannabis is a pretty big thing these days, right? Cannabis, big thing. You know, CBD, THC, all that stuff. Well, you know, you can go smoke a joint, and in 2 weeks, no one's going to care, okay? FDA doesn't care. Your mom doesn't care. You forgot all about it. That's kind of a cannabis joke. But if you violate securities law, that never goes away, okay? That will never, you cannot wash that out of your transaction. This is what trust companies and broker-dealers and regulated financial institutions are most concerned about our industry. They see the huge opportunity. So we have built a platform at Vertalo that allows you, as entrepreneurs starting token-based digital asset funded companies, a method and a mechanism for maintaining ongoing compliance for yourselves and for your investors. As an issuer or as an investor, this is something that you should be very, very interested in. Our system looks a lot like a cap table. The difference is it's got blockchain addresses, okay? We produce a platform that has a cap table. It's, I think I moved ahead in a build here. Let's see what happened there. Look at this. Boop. Boop. Okay, so this is a cap table. You see a name, you see a wallet ID, you see a rejected wallet owner, you see a wallet owner's view of their holdings, including their KYC. So we've done two things. We put compliance on the blockchain. We take your terrestrial ID and we combine it with your KYC and AML, and we fuse that into a compound ID, which is hashed. That can be used to bring to broker-dealers, custody, and to exchanges in order to perform a transaction of digital assets. For issuers, we take the ownership of the asset and we put it on chain in conjunction with the investor so that the investor knows exactly what they own. They see it on chain, it's theirs. Not like a paper certificate in a vault somewhere, but it's on chain for you to own. Digital asset, eligibility, take that to a transaction, trade. Without these pieces, in the US, you're not going to see the liquid market for digital assets that we all are looking for. We are currently working with companies like Prime Trust, eToro, Polymath, Open Finance, and KYC, AML, and investor qualification partners, Early IQ and Verify Investor. If you are running a token offering and you want to make sure that your investors are qualified and that they own their wallets, we can help you with that. We can issue tokens. That's not our main business. We run a B2B SaaS business for managing investor stakeholder registries and compliance information on the blockchain. What does this do? If you're a broker-dealer or custody or an issuer, we reduce costs. If you're an issuer or a regulated financial institution, we eliminate risk. If you're an investor and you want to buy something, we reduce the commit, qualify, and fund cycle. Let me explain that last piece because it matters for primary and secondary issuance. How many folks here have gone and bought in an ICO or some other offering? How many of you have had to wait days while your deal was being approved by an external KYC platform? How many of you then got cold feet during that time and said, wow, this is bogus. I hate waiting for 4 days. I'm clearly accredited. What if you could just bring all of those credentials right to the deal? Now imagine a year later when that token suddenly locks up. Guess what they want you to do again? They then want you to go get permission to sell what you own. And then you're going to have to look at some whitelist, okay, at an exchange, at an issuance platform, at a broker-dealer. Who owns it? Who's going to give me permission to sell what I already own? That's bullshit, okay? If you really believe in decentralization, then you want to own your digital certificate in your wallet. You want to own your KYC, and you want to BYO your KYC to your ICO. You don't want to wait 4 days. And if you're an issuer, you don't want to pay $200 to go qualify some guy who's going to give you $1,000 to invest. What if he just came and brought his credentials? What if she could prove that she owned this wallet? This is what we're doing. We're reducing costs, we're shortening cycles, and we're restoring ownership back to the owner, okay? When someone says they're going to put you on a white list, you should say, white? What? Why am I on a white list? What happens if that company goes out of business? How am I going to get permission to trade what I own? Okay? I want to make sure that everyone here, if they're not working with 10 Capital directly and you're just here because you heard about this conference and you're an entrepreneur and you want to check things out, I highly recommend that you talk to Hall Martin and the folks at 10 Capital. 10 Capital has been an amazing partner for SeriesX and Vertalo. In Austin, we accelerated out a Capital Factory. That was great. Thank you to Josh Baer and the team at Capital Factory. We came in second in the South by Southwest Blockchain Challenge. Guess who we lost to? We lost to some bot trading platform that was getting sued by the SEC for non-compliance. I thought that was pretty awesome. I haven't heard from them in months, by the way. I think they're on the run. Shasta Ventures is a, you know Shasta? Shasta's fantastic. What's that? Right? They're fantastic. So this is the second time that they invested in my last company, Series B, and they were the first check in our institutional round here. We've got Next Coast Ventures. Next Coast is a fantastic firm here in town. If anyone wants a referral to those guys. My law firm for 3 companies has been Lowenstein Sandler out of Palo Alto in New York. Great securities lawyers. Yeah, so we're raising a seed round right now. We are not selling tokens today, but anyone who invests in the Vertalo seed round gets a token dividend, which is actually, it's priceless. So let's see what that's worth when we issue it. So no promises there. This is the end of our seed round. We're just raising the last, I don't know, 500,000 or so. This is a priced Reg D round. We've had crypto money in it. We've got VC money in it. We've got angel money in it. And thanks to Hall Martin, quite a few angels. I'm Dave. My co-founder, Gautam, is a former SEC attorney and securities lawyer. And my other co-founder is a PhD from Berkeley in knot topology, which is some kind of like string theory thing. I don't, but he writes mean code. And we've got a bunch of advisors, and every one of our advisors actually works on the project in some way or another. You notice there are no JPEGs here, okay? We do not believe in JPEG advisors, and nor should you. Lots of lawyers, because when you're a compliance startup, you need to focus on regulatory compliance. We are going to be at this crazy 50 on fire party, at Capital Factory on Thursday night. If you want to go meet some other startups to invest in or get a job at, that's a great place. I already told you that we came in second out of 137 companies at the South by Southwest Blockchain Challenge. And we've been at this for a couple years. So thank you very much. I appreciate your attention, and happy to take any questions or happy to talk over lunch whenever anyone has any questions. Yeah. Yeah. So we have partnership with Open Finance. We're in conversations with AlphaPoint and T0 right now. ATSs are a big beneficiary of this kind of change in finance because they already have the customers that they've sold to. The secondary markets are, Pete understands this, the secondary markets are going to be run a lot by broker-dealers in this kind of next move. And they believe they can do it very cheaply. I will tell you, I am not a decentralization, I'm not orthodox decentralization when it comes to exchanges. I think that it's very, very complicated to do decentralized exchanges with regulated assets, because you've got to bring credentials to the deal that you can't, and you've got to pay for it with some other currency, because someone doesn't want like a slice of your security token to pay for your commission. So it's different than cryptocurrencies. This is why what we're doing is important. You understand that it's not like trading Bitcoin when you trade a regulated financial asset. There's a function which is frankly different. And so there's order matching, there's market making, there's paying commissions. So understand that there are some great ideas for exchanges coming, but I think broker-dealers are frankly going to benefit because they've got the CRM data, and they're used to doing the KYC and AML. And crypto exchanges that are kind of trying to move from trading cryptocurrencies with 18 decimal points where they can shave a piece off for a commission, that's not something that makes a lot of sense with a share of IBM. There are big jurisdictional issues. I mean, you saw Kraken, you're in Shapeshift. So, yeah.
So, I guess the biggest question would be, once a couple of the interesting regulatory bodies decide to make a ruling, why won't existing exchanges just take over this job and crush anybody else that's an entrant?
They are. There are existing exchanges like IEX. NASDAQ has hundreds of people on this right now. Don't be confused that this is not on the minds of NASDAQ and NYSE. But for the folks here who are technically oriented or fixated, the blockchain is an extraordinarily slow database, and it does not do very well for fast-moving securities. So the notion that we're going to move to public equities trading on the blockchain in the next 2 years, unless everyone moves to like Hedera Hashgraph or something that transacts at the speed of Visa. Unlikely on Ethereum, which is a really, really cool system, but the TPS values are too low.
Have you done any analysis on compatibility of storing identity data on the blockchain with GDPR regulation?
That's a fun question. Mr. Sedici can tell you about the blockchain doesn't forget, right? So without going into a long, so I co-founded an ad tech company, a first-party identity ad tech company before this, and I moved from London to here. So I ran away from GDPR, but you can't escape it because it's going to come here. Just like our financial laws are going to go over there. Our only way to deal with that is we put it in a EULA and we write out our liability, our company, into a user agreement. Did you have a question?
Hi, nice to meet you. I'm with the Central. I'm a general counsel there. Yeah, one of our client companies, iCash, is a security token.
Yes.
Have you heard about iCash?
Yes.
Oh, okay, great.
Yeah, I met your CEO
Will?
in New York in May at Consensus.
Oh, great.
Yeah, it's a super interesting project.
Of course,
Yeah.
I would love to talk to you more about it. Have you looked into EOS? I know you talked about Ethereum.
So we are agnostic to any blockchain for the placement. If you want to generate your digital asset on a blockchain other than Ethereum, that's great. EOS is a new chain, which is still working its kinks out. No necessity for me to comment on their governance model. There's enough comments about that. But it's a Stellar, okay, Hedera, EOS, Hyperledger, Ethereum. They're all competing to be the place where people are using to place securities on the blockchain. So I'm excited to talk to you some more, though. I've used up my time, so thank you very much for your time.